June is 10 years of helping clients through their most crucial capital decisions. This firm had basically two goals. One was, within the context of doing small company investment banking work, to serve as many people as possible. And because part of the value of an intermediary who's helping you in the capital markets is that they actually know the market. The other was how to see the market more often than anybody else could. Small businesses M&A is a really slow moving market. So our goal was see it as much as we can for a small group with 200 and a little bit more clients over 10 years, which is, by the way, probably 5 times the frequency of seeing the market of a normal lower middle market boutique. We were really able to do that. And that in itself has big benefits to our clients and to our referral partners. So this business model, which was find a way to provide great investment banking advice for what other investment bankers would see as bad deals, was a guess that there'd be a market for it. Awareness of the pain point came out of the prior firm that I had helped to run, where we realized a few things. One is that it takes a whole lot of work, of course, to build a great big funnel of new business opportunities. While we'd like to say we've got so many, there's just more than we could ever handle, that isn't real life, right? Too. Without a great big funnel of them, it's really easy to slip on the discipline of only taking on the clients whom you can really make money on. If I'm going to work for 9 or 12 months and be paid a commission at the end, really need a lot of discipline about having more opportunities than I can serve by choosing the best ones. The best ones are ones that you know will transact. You know they'll transact quickly. You know that your clients will take market terms so they become apparent. And you know that there's some clear triggers if something starts to appear like it might be going off the rails, that you can stop the deal and turn your attention to something else. Investors do this with a lot of discipline. If you think about an investment fund, it's not unusual for investment funds to look at 100 investment opportunities for every one they do. In a lower middle market boutique, you need to act more like an investor than like a typical professional services firm. The issue is there are people who need help who aren't necessarily the most economic clients in the world. Once you're in the middle of a deal, out of loyalty and your reputation and respect for your clients, you're going to do everything you can to try to get that deal across the finish line. It just doesn't work for anybody in a lot of ways to say, gosh, this deal's gotten really hard, so I'm just going to quit. But economically, if you've got people trying to allocate their time to what's going to make the firm most successful, there's a real tension that says, well, should we keep devoting time to this thing that's starting to look hard to do? Or should we devote that time to new business generation because we need to have a great big sales funnel in order to take on the right clients? It's not a crazy, weird business problem, but it's just a pronounced one in running an investment banking boutique or running anything with a complicated transaction that gets paid on commission. What I thought we had the chance to do, because I felt that pressure acutely, was go to other people in our business and say, look, we'll change the economics in how we approach clients to be pay as you go rather than a commission at the end. We'll pursue client situations that are better handled pay as you go than with a commission at the end. If you had been trying to sell an engagement with a commission on the end, you look at that and say, well, that's a bad client because they will take a long time to serve. The commission won't be that big. They really need help, but we can't serve them given the economics. Our view was we'll make the economics so we can serve them, and we'll go tell our peers, look, we'll help on the, no offense to the clients, but on the bad deals so that you can do more on the good deals. That was the fundamental experiment. First, did our peers share the pain point that I had felt acutely? Second, would they trust us with their prospects and with their clients, not to come back and compete with them later on after the fact? Third, were there enough of these situations that we could build a firm around it? And I think over a decade, we found that the answer was yes to all three of those things. Yes, it is a pain point in the business of building small investment banking firms. Yes, if we behave well and act at the highest level of professional skill and professional ethics, yes, people will trust us. And third, yes, there are enough that we can build a firm that's lasted for 10 years and ideally build a bigger firm over the next 10 years.